All right, so Pagaya's Q3 earnings just hit the street, and whoa, the market definitely noticed. We saw a big surge in the stock, and everyone's asking, what's behind this move? Well, you've come to the right place. In this Talk Tickers briefing, we're going to dig into exactly that. We'll break down the numbers, what management's saying, and what it all means for investors. So let's jump right in.
And look, when we say the market reacted positively, we're talking about a huge reaction. The stock popped a massive 12.8%. And not just on a little bit of trading, we're talking heavy, heavy volume. That's the market giving a big thumbs up, loud and clear. It's a signal that investors really liked what they saw and what they heard.
So what's the story here? Well, in a nutshell, it was a decisive beat and raise quarter. And if you're an investor, that's just music to your ears, right? It means they didn't just meet expectations, they completely smashed them. And then, to top it all off, they turned around and said, hey, we think the rest of the year is going to be even better. This wasn't just a good quarter. It shows real momentum, with growth accelerating and profitability expanding right alongside it. Okay, so let's get into it. To really understand why the market reacted the way it did, you've got to look at the numbers. Let's break down the headline figures from this quarter's performance. All right, let's start with the bottom line, the profits. Non-GAAP earnings per share came in at about $1.02. Now, to put that in perspective, the consensus on the street was looking for something around 56 cents. So, yeah, they didn't just beat the estimate, they absolutely crushed it. That's a massive surprise to the upside. And it wasn't just on the bottom line. Let's look at the top line. Total revenue hit a record $350 million. Now, that's not only comfortably ahead of what analysts were expecting, it's also a 36% increase from the same time last year. That's some serious acceleration. And this, right here, this is where the story gets really interesting. This chart perfectly illustrates what we call operating leverage. Adjusted EBITDA, a key measure of profitability, surged an incredible 91% year over year to $107 million. Think about that. Revenue grew 36%, but this profit metric grew 91%. It means as they get bigger, they're getting way, way more profitable. That's the sign of a fantastic business model at work. Now, what's so great about this slide is how it lays everything out. I mean, just look at it. It's a beat right across the board. From the total network volume to the fee revenue they generate from it, everything is showing significant growth, not just beating estimates, but also blowing away last year's numbers. It's a textbook example of a company that is absolutely firing on all cylinders. Okay, so the numbers are obviously fantastic, but what's the why behind them? Let's dive into management's playbook because beyond the figures, they laid out a really clear story. It's all about product-led growth and a super resilient business-to-business model. The CEO, Gal Kruger, really hit this point home on the call. The quote here says it all. They've done the hard work, laid the groundwork with discipline, and now the focus has shifted to product-led growth. What does that mean? It means they're laser-focused on perfecting their product suite to solve some of the most fundamental challenges their lending partners face. It's a smart shift from just building to really optimizing. And you know what? This product-led growth isn't just a talking point. It's already showing up in the numbers. Look at this. They're diversifying their business in a big way. Auto and point-of-sale lending now make up 32% of their total volume. Just a year ago, that number was only 9%. That's a massive shift, and it shows the strategy is working, making them a much more robust company. So how do they keep this momentum going? Well, the core of their entire strategy is what they call their B2B flywheel. It's a really powerful concept. First, they onboard new partners. Then they expand that relationship by offering them more products. This grows the total network volume, which in turn feeds their AI with more data, making it smarter and more effective. And, of course, a better AI and more funding options attract even more partners. It's a classic virtuous cycle. Now, a flywheel like that needs fuel to keep spinning. And for Pagaya, that fuel is capital. And this is another area where they've been executing brilliantly. This quarter, they executed over $1.8 billion in asset-backed securities. They locked in a new forward flow agreement, and they even did a successful $500 million corporate debt raise. All of this just fortifies their funding structure and gives them the firepower to keep that flywheel accelerating. Okay, so that brings us to the outlook. A great quarter is one thing, but what does the future hold? Well, this builds a ton of confidence. For the third consecutive time, management has raised their full-year guidance. That's a really strong signal. And this slide really puts it into perspective. We're not talking about a tiny little nudge upwards. The full year 2025 outlook for revenue, adjusted EBITDA, and even GAAP net income have all been revised higher. When a management team does this, especially for the third time in a row, they're telling you that the strength they're seeing is real and sustainable. This isn't a one-off. So let's put it all together. We've got a fantastic quarter in the books, and we have guidance that's been raised yet again. So how should we be thinking about Pagaya Technologies from here on out? It's time for our take. This really is the most important question for any investor looking at the stock right now, isn't it? After a quarter like this, what's our call on Pagaya? Okay, here it is. Our call on the stock is an outperform reading, and here's why. We think the company is executing incredibly well. That operating leverage we talked about is super powerful, and their competitive position just keeps getting stronger. So what could push the stock higher from here? We see a few major catalysts on the horizon. First, they have a record-high pipeline of new partners, and as those convert, that's going to drive new volume. Second, we expect to see continued margin expansion as they scale up. And finally, that flywheel we talked about, that multi-product strategy, is just going to keep compounding on itself. It's a powerful setup.
Now, just a quick reminder, this analysis is for informational purposes only. It is not financial advice. So please always be sure to do your own homework before making any investment decisions.